session, and I promise you that this session will be an exciting one. So today, I would want us to look at cost estimation. When we started this particular subject, ladies and gentlemen, I told you that one of the most important functions of a management accountant is his work of ascertaining cost. And of course, after ascertaining cost, we move to the next stage of cost control. So how will you be able to ensure that you are controlling expenses for an organization? That can only be done if you are a good estimator, if you are able to provide estimations in advance. So in that case, you will be able to estimate cost, get predicted cost. If, for example, I predict that when I do this particular house up to foundation level, it is going to cost me 10 million Kenya shillings. And then during execution, I realize that that particular house at that particular foundation level has actually taken like 12 million. So I can see, ladies and gentlemen, that there is a variance of 2 million. And that variance is a bad variance, is what we call an adverse variance. So once I start knowing from down there foundation level that I've been able to incur variances which are hitting on my profitability negatively, then I'll be able to bring in corrective mechanisms to ensure that moving forward, we shall be able to save on our expenses, to ensure that we generate what we call positive or favorable variances. By ensuring that we shall be having favorable variances, then automatically that means that we are now checking on our cost. We are controlling our cost. So, ladies and gentlemen, basically what is cost estimation? Cost estimation entails what we call determining expenses that we're going to incur in advance. Saying that, for instance, in December, our production cost will be, right now we are in the month of April, but I should be able to see far as a management accountant and say that in December, the production cost will be what here will be like 30 million. So I'm forecasting, I'm predicting, I'm estimating future costs today. And that is why cost estimation is also known as a method of predetermining costs for purposes of what here? Cost control. Then what methods do we have which will be assisting us, ladies and gentlemen, to estimate costs? So methods of cost estimation, you can see them here. Number one, we have engineering method, accounts analysis method. Number three, high-low method. Number four, scatter graph method. Number five, ordinary least squares regression method. So we're going to look at each of these methods one at a time, where we begin with the engineering method. So we have here engineering method. Ladies and gentlemen, it will be worthwhile for us to understand from the word go that engineering method is normally effective, is normally used in situations where we do not have a very good history of our costs, right? We do not have a good, perhaps we've not been keeping a good history of our costs that we've been incurring over time. Because if we had kept proper records of our costs, then extrapolating our historical cost to know what the future will be very easy. I'll not go to rely on this engineering method. Now, ladies and gentlemen, because of lack of this particular historical cost data, we may be forced to go for this particular method that we call what engineering method. Whenever I hear of engineering method, I'm able to remember a very important scholar called Frederick Taylor in a subject called Strategy, Governance, and Ethics, which we'll be doing after 2 years or 1 year from today, depending on whether you're combining or we're doing one section at a time. So engineering method entails, ladies and gentlemen, what Frederick Taylor told us, that we can only be able to do our estimations using this engineering method in a situation where, fine, we don't have a historical cost data, But for us to be able to use engineering method, then automatically there must be a clearly observable input-output relationship. Input-output what here? Relationship. Input-output relationship. Such that if, for example, you're looking at a company like Mumia Sugar. Mumia Sugar, of course, even from their daily productions, they must be quite aware that if they are going to crush 1,000 tons of sugar, 1,000 tons of sugarcane, if they are going to put in their system 1,000 tons of sugarcane, they are quite aware, they must have, even if they have not been keeping records for those over those many years, currently, from their current experience, they must be knowing that if they, for example, they put 1,000 tons of sugarcane, they are going to get, like, for example, 30,000 kilograms of refined sugar. 30,000 kilograms of refined what here? Sugar. Ladies and gentlemen, this is quite a clearly observable input-output relationship, that if we put 1,000 tons of sugar, then we shall give birth to, we shall produce 30,000 kilograms of refined sugar. Given this input-output relationship that we've been able to establish, now we can easily make future cost predictions, ladies and gentlemen. How? So I will know that if I put in 1,000 tons, I'm getting 30,000 kgs. So what if I procure 2,000 tons of sugar cane, which I'm going to put in the system? Then I expect, ladies and gentlemen, to get double here. So if I cross multiply, I expect to get what here? To get double. So from this, now we'll very easily be able to, for example, estimate how much I need to be able to buy sugarcane, to be able to buy some certain raw materials so that I'll be able to meet some targeted output levels. It's called engineering method. And engineering method, if somebody asks you a question of 2 marks, and engineering method, what you're supposed to tell us, number one, is that the method is very useful in situations where we do not have a history of our costs. And then number 2, tell us, just to finish everything, right? Tell us, ladies and gentlemen, that it is used in situations where we've got input-output relationships which are in existence. So engineering, like I gave you a very good example of Mumia Sugar, it becomes what here? A good example of farms which can easily use the engineering method, the producing organizations, etc. Now, this model has got one big disadvantage. What if there is no input-output relationship? What if, for example, we have got this scenario of fixed costs which are independent of the number of units here that are produced? So even if you produce 10,000, the cost is ever fixed. Then that method, this method, can never be used in such a scenario. Very important for you to pick that. From there, we go to the second method, ladies and gentlemen. After engineering method, we have this other method called what here? High-low. Called high-low method. Called what here? High-low method. Called high-low method. High-low method. Called high-low method. High-low method. So when we talk of a high-low method, what comes to our mind? When we talk of a high-low method, ladies and gentlemen, what you're supposed to know about high-low method is that it is also called what here? The range method. High-low method is also called the range method. Ladies and gentlemen, about this high-low method, what would I expect you as great students of ours to appreciate about high-low method? What would I expect you to appreciate about high-low method? So this high-low method, as the name suggests, it makes use of 2 points only. It uses 2 points only. Which points are these? Number one, we have the highest X value point, and then number two, we have the lowest X value point. So the most important thing will be for us to appreciate, ladies and gentlemen, that high-low method makes use of how many points? Only 2. Which points are these? Ladies and gentlemen, they are I've put them here. So the biggest disadvantage of this model is that it disregards all other points. It only makes use of 2 points here to enable us carry out a cost estimation, Very important for us to pick that. Now, how does this operate? Illustration. Now, ladies and gentlemen, for high-low method, if, for example, you are given here X could be the output. And then we are given costs, which will be our Y now. So if you're given these two, for example, they tell you 10, 11, 15, 18. And then we have, for example, here 13, 16, 21, 36, like that. 36. And perhaps in this case here, I could come and have something like 8 vis-a-vis what here? 9. 8 vis-a-vis 9. So if you're given this kind of data, this kind of information, and then your examiner wants you to come up with a high-low equation for cost estimation, how will you be able to do that? Ladies and gentlemen, I will recognize the fact that we are only going to make use of not all the points. We are only going to make use of only 2 points. And these 2 points, ladies and gentlemen, are which ones here? We have the highest X value. So the highest X value here is 18. So this 18, of course, you take it as a point with respect to Y. So even if Y figure is not the highest, the most important thing is for you to recognize the fact that we are working with the highest X value. And then correspondingly, I simply circle that as my highest. And then out of all this, I will look for the lowest X value. The lowest X value here is 8. 8 with what here? 8 with 9. 8 with 9. So this will be the lowest, like that. And ladies and gentlemen, now after you give me that, then I'll come and reminisce, or rather recall very fast that high-low method is used to develop equations of this nature, straight line equations. High-low method is used to develop equations of this nature. Now, if you recall from your simple mathematics, for us to be able to construct a linear function, a straight function, we need 2 points. And fortunately, the high-low method gives us the 2 points. We have the high, and then we have got the low, like this. So then the high, what do we have here for the high? Now listen. So I'm going to form 2 equations. So for the high equation, I can see the value of Y. For the high equation, I can see that Y is 36. 36 equals A that I don't know plus B times X. X still for the high, X which is what here? 18. And then you go and ahead and form for us the low point equation. This is the low point equation. I'm plugging in the figures in this particular equation. Then what do I have at the end of the day? Then this will be 9 equals A plus. Remember, I'm plugging the low values in this equation. So the Y is 9. So 9 equals A plus B times X. X which happens to be what here? X which happens to be 8, like that. X which happens to be 8. Now look at this. This is the most interesting thing. So ladies and gentlemen, I'll go to the next level where basically I need to rewrite this mathematically. These things I need to write them mathematically. So in this case here, my summary here is 36 equals A plus 18B. Equation number 1. Equation number 2, we have 9 equals A plus 8B, like that, because there is no way you can ever write a letter before a number. This is mathematics, and in mathematics, numbers take precedence. Numbers have to be captured first. Then now, ladies and gentlemen, after that, these are simultaneous equations that we need to come and eliminate A. Because the A coefficients are the same, so you can only eliminate A through subtraction. So what is 36 minus 9? What is 36 minus 9? 36 minus 9? 27. Thank you very much. This and this disappears. That was our objective because we wanted to eliminate A. How about 18 minus 8? 10B. Thank you very much. Now, if that is the case, I never wanted 10B. I wanted B alone. So B will be 27 divided by 10. So what is 27 divided by 10? Somebody here? 2.7. Thank you, and thank you very much. Now, ladies and gentlemen, the moment I'm able to get the value of B, then I will very easily give you the value of A through substitution. So through substitution, what do we have? We'll come and say here, what is the value of A? What is the value of A from equation 1? What is the value of A from equation 1? So from equation 1, we have 36 equals A plus 18 times B, whose value, fortunately, we have, which is 2.7. So I'll go ahead and cascade this down further. So this will be 36 equals A plus, what is 18 times 2.7? 18 times 2.7. 48.6. Thank you, and thank you very much. So remember that I would want to put like terms together, constants together. So this constant has got to fly over. Once it flies over an equal sign, we expect, of course, to see a negative there. Sign has to change. So then this will be 36 minus 48.6 equals A. So my brother implying that A will be equal to negative what? 12.6. Thank you very much. 12.6. Now, I happen to be having very important constituents of my equation, high-low equation. So we know that our y, ladies and gentlemen, we know that our y here is supposed to be equal to A plus bx. So our y here will be equal to A, which is 12.6 plus B, which we found as 2.7. 2.7x like that. So now I've been able to come up with a high-low equation. And if you tell me to interpret this, I know that the cost that is just alone, this cost here that doesn't have any association with X, the cost that doesn't associate with productivity is what we call fixed cost. So this is fixed cost, and this one here now that has X here is the gradient. The one that so this becomes the variable cost per unit. Of course, I'm cognizant of the fact that fixed cost can never be what? Can never be negative. But remember, this is just a question that I got out of what in my head, Great. So I want to imagine that you've been able to pick a concept there. But what if, for example, ladies and gentlemen, you went ahead and found this kind of a thing? So we have here X, we have here Y. So we have 10, 10, 18. Then we have here, for example, 6, 4. And then we have here 14, for example. 14, for example. And then somebody tells you you are required here to determine the cost estimate, determine the cost estimate of producing 100 units using the high-low method. Very easy. The first thing that I will do in my desire to get a solution to this is to look for the highest X value. Which is 18. But you take it as a point. So you have this being the highest. Then when I go to the lowest, I discover I've got two lowest X values. I have 10 with a 6, and then I have 10 with a 4. So now between the two, what will I do? Because both of them are lowest. So between the two, the tiebreaker. So because I'm looking for the lowest, the tiebreaker here will be for me to look for the lowest of the very lowest. So then do I work with 10 with a 6 or 10 with a 4? I would rather work with 10 with a what here? A 4, because that is much lower than with 10 with a 6, like that. Now, ladies and gentlemen, the moment I do that, the moment I've been able to identify my high and lowest point, then the next thing will be for me to define my equations simultaneously. So remember that the general high-low equation looks like that. Come and develop the highest value first by plugging in. So you can see the y here for the highest is 14 equals a plus bx. So b times 18. And then we have the lowest point, whose y I can see is 4, equals a plus b times 10. So once I have that, ladies and gentlemen, then my work will be quite easy. Because what I'll do, I'll come and do my summary as usual. So we have 14 equals A plus 18B. That's equation number 1. And then equation number 2, we have 4 equals A plus 10B. Equation number 2. So please go ahead and subtract. So 14 minus 4 gives me 10. This disappears. 18 minus 10 gives me what here? 8B. Implying, ladies and gentlemen, that my B again here will be 10 over 8. 10 over 8. No. 10 divided by 8. 10 divided by 8. 10 divided by 8. 10 divided by 8 gives me 1.25. Thank you very much. Ladies and gentlemen, the moment I have the value of B, the honors for us will be now to look for the value of A. So we'll look for the value of A. We look for the value of A. So to get the value of A, we need to ask ourselves, what will be the value of A from equation number 1? So from equation number 1, we have 14 equals A plus 18B. But fortunately, we know that B is 1.25. So then 14 will be equal to A plus, what is 18 times 1.25? It can't be. 18 times 1.25. 18 times 1.25. 22.5, thank you very much. 22.5, thank you very much. So come and take this to the other side. So it will be 14 minus 22.5 equals A. This one crossing over, we expect, of course, to get the sign changing, which gives us negative 8.5. Unfortunately, because of the examples that I'm giving you from my head, I'm getting again A to be negative. Too bad. But of course, for purposes of driving the point home, I want to believe you are really getting the concept. So that is A and that is B. And ladies and gentlemen, the moment I do that, don't forget that the finality, this thing will be culminating in an equation. So our equation looks like this. Y equals A plus BX. So my Y will be equal to A that I have as minus 8.5 plus B that I got long time ago of 1.25. So I have got a relationship between Y and X. And don't forget that this examiner wanted us to give them the cost estimate when X equals 100. So I'll simply come and use the equation the way it is. So my Y will be minus 8.5 plus 1.25 times X, which is 100. So this is 125 minus 8.5. Could you kindly give me that figure? 116, 0.5. And that is the answer, like that. So that's what we call high-low method. That's what we call high-low method. That's what we call high-low method. High-low method. That's what we call high-low method. So if, for example, they were to give you something like this, XY, we have here, for example, 5, 17, 17, 6, 9, and maybe 11. So when you are looking for the highest X value, you'll see 17 is the highest and there are 2 of them. Please note this, 17 and there are 2 of them. But now because you're looking for the highest, then this has to be the highest of them all. Highest of the highest. Highest of the highest. So in this case here, of course, it can't be 17 with 9. It will be 17 with what here? 11. That is what will be the highest of the highest. So of course, when we go straight away to look at past papers, you'll be able to pick now this concept very, very easily. Very, very easily. Now, ladies and gentlemen, we look at another method called accounts analysis method. Accounts analysis method. Accounts analysis method. Quite an interesting method. I like it. Accounts analysis method. Accounts analysis method. So under accounts analysis method, under accounts analysis method, I will be looking at each account and doing a cost classification. I'll be looking at each cost account, I'll be looking at each cost account, ladies and gentlemen, and of course doing what here? That partitioning of the cost account into the variable component and the fixed component. So let's talk of account analysis. I'll be getting each ledger of my cost elements. So when I get each cost, what I'll be doing, I'll be looking at the fixed component is how much, variable cost is how much. So I'll be subdividing. It'll be very important for us to appreciate that. Okay, ladies and gentlemen, here we are. For us to be able to understand this, then it will be very important for me to give you an example. So we are saying here under account analysis method, the accountant examines and classifies cost incurred as variable or fixed. So like now you can see here, they are telling us, suppose a company ABC has the following cost with a value of 7,000 units, has the following cost, and you can see that cost is incurred for producing how many units here? 7,000 units. So what do they want us to do? They want us to determine the cost equation using account classification method and determine the cost of producing 9,000 units. So this is quite a straightforward thing, So what I will do is to copy down that table the way it is. So you copy down the table the way it is. You copy down the table the way it is. We have direct labor. How much? 150,000. 150,000. We have materials, 125,000. So materials, 125,000. From there we have repairs, all variable, repairs, all variable, of 5,000. 5,000. We have depreciation, fixed. They've told us it's fixed. Depreciation of 15,000. Then, ladies and gentlemen, we have our administration expense. So administration, ladies and gentlemen, over 1,000. Administration over 1,000. And then we have indirect labor. They are giving us a figure of, I hope you're able to see indirect labor down here. Indirect labor, they're giving us a figure of 4,000. So indirect labor, they're giving us a figure of what here? 4,000. So ladies and gentlemen, if that is the case, what we shall do is to come and now reclassify these expenses into variable vis-a-vis what here? Fixed columns. Very easy. So ladies and gentlemen, listen. Anytime they speak of an expense that is directly related to output, expenses that are directly related to output, all of them become what here? Variable. So meaning that the entire total figure here will be slotted under variable cost. Then we have got materials, like I gave you a very good example of timber. So timber, of course, we expect the timber we acquire straight away, the more. The timber cost will be materials, unless you're told otherwise. Materials, the entire figure will always be slotted under variable cost. Then we look at repairs. What have they told us? They will really guide you. Repairs, all variable, 5,000. Then we have got depreciation. Even if you're not told, depreciation, like now the one of straight line method, we normally have constant depreciation amounts. So depreciation will always be what? It will always be constant. So depreciation here is 15,000. Then we have administration, administrators. These are overheads, common expenses. Things like manager's salaries. Manager's salary, they'll always be what here? Fixed. So administration will always be fixed. Fixed at how much? At 1,000. And then we have indirect labor. Any expense that is indirect is a fixed cost. Sorry for that. So administration, we lost it a long time ago. Ladies and gentlemen, depreciation is fixed. It's supposed to be slotted under fixed column, yes. We have administration is fixed, supposed to be slotted under fixed, yes. And then, of course, all indirect expenses are what here are fixed. So basically, that will be our role. Under accounts analysis method, we analyze a particular account, and then we'll be able to subdivide. And then we'll be able to say, where do we slot it, either as a variable or a fixed thing. So then from there, come and give us the totals. Give us the totals. We start with the total variable, 150 plus 125 plus 5,000. I'm being given a figure of 280,000. How about fixed cost, kindly? 29,000. Are you sure? 15 plus 5. 15, 20,000? 20,000. Thank you very much. 20,000. Thank you very much. Now, ladies and gentlemen, remember now the next step. Once you have total variable cost, give us variable cost per unit. Remember, for variable cost, you always prefer, unlike fixed variable cost, you normally prefer variable cost per what year? Per unit. Variable cost per unit. So please go ahead and give us the variable cost per unit. Variable cost per unit. So the variable cost per unit, I will take the total amount of 280,000 divided by the number of units which were produced with these expenses. The number of units produced with these expenses you have been given in the question. The number of units produced here, the number of units produced, the number we were given here, 7,000 units. 7,000 units. So please take the figure that you have here, divide by 7,000, and then you should be able to give us a figure. 40, 40, thank you very much. Now, once I have 40 per unit, then I'll come and remember exactly what I'm supposed to be doing. This is account analysis method. This is account analysis method of cost classification, of cost estimation. So if it's cost and account analysis method, I know that cost should be variable cost plus fixed cost. Variable cost plus fixed cost. So then these will be Vx plus fixed cost. So my cost here will be equal to, we have the variable cost per unit of 40 times number of units, which can fluctuate, plus fixed cost of what here? 20. 20. Yeah. So remember, X is 7,000 for this particular what here, for this particular cost estimate, but I needed an equation that can flex. So now I have a cost equation arising out of what here? We have a cost equation. Arising out of account analysis method. So then, ladies and gentlemen, what I need to do is to come and check out what they want us to estimate. So they wanted us to estimate here the cost equation, of course, that we have, and determine the cost of now producing. We estimate the cost of producing 9,000 units. We estimate the cost of producing 9,000 units. Remember, please, F is always independent. Fixed cost is always independent. So in this case here, my C will be 40 times 9,000 plus 20,000 plus 20,000. So could you kindly give me this figure? 380,000. 380,000. 380,000. That is the proper what here? That is the proper parameter. The proper parameter. 380,000 is the total cost that you've been able to estimate. You've been able to estimate. You've been able to estimate like that. Great, great. So ladies and gentlemen from there, I would want us to really look at the next thing here. Look at the next thing here. Another illustration. In the year 2020, RCM, which sells what here, somebody? RCM, which sells online tutorials, videos, nice videos, plus textbooks and revision kits at a very affordable price. Should you want to buy our books, this is our number. Call us here, 0719 525,000. Call us today. Right? So we go back to our example. Our example, ladies and gentlemen, is quite an interesting one. So we are told in the year 2020, RCM incurred the following expenses to maintain 800 lecturers. So you can see administrative expenses, they are telling us 40% is variable. Lecturing pay, 60% is variable. Airtime allowance, the whole of it is fixed. And then we have sundry expenses, fixed 50%. Using accounts analysis method, express an equation, give us a cost equation. So the very first thing that I'll do is to write down this table of RCM. So we have administrative expenses, administrative expenses, 5 million, of which 40% is variable. 40% variable. And then, ladies and gentlemen, after administrative expenses, what next there? We happen to be having lecturing pay. So we have lecturing pay, 60% variable. Over how much? 60% variable of 6 million. From there, ladies and gentlemen, after lecturing pay, we have airtime allowance. The whole of it is fixed. Over how much? Of 4 million. Lecturing pay, I think we have quite a lot here, but we'll just pick. So we have administrative expenses, 5 million. And then what we have here is the lecturing pay. I just have to remove this. Lecturing pay, okay, is 6 million. That is okay. And then we have airtime allowance is supposed to be what here? 500. Airtime allowance is the one that is supposed to be 500,000. Yes, airtime allowance is the one supposed to be 500,000. And then we have sundry expenses. So sundry expenses, ladies and gentlemen, the whole of it. No, it's 50% that is fixed. 50% is fixed. So what are they giving us here as the figure? Is 300,000. So and then now we are supposed to come and do justice to these figures. We're supposed to come and do justice to these figures. If it's cost accounts analysis method, I'll come and split this into two. So I need a column for variable. I need a column for what here for fixed. I need a column for variable, another one for fixed. So we start with the first category, which is 5 million, administrative 5 million, of which 40% is variable. So 0.4 of 5 million, 2 million. Meaning that the other amount, which will be 3 million, is fixed. The other amount, which will be 3 million, is fixed. Look at lecturing pay. It is 6 million, Out of this, 60% is variable. What is 0.6 of 6 million? 36. So we have 3.6 here. And then, of course, the balance, which I so believe is 2.4 million, will be fixed. And then we have the airtime allowance. 500,000 should be fixed. 500,000 should be fixed, dash like that. And then we have the sundry expenses, of which there are 3 million, of which 50% is fixed. So 50% is 1.5 million, which is fixed there. And then the 1.5, or it's 150. I'm told it's 300,000. So 150,000. 150,000, like that. And that is it. So please come and give us the totals. Come and give us the totals. Please give us the totals. Please give us the totals. 50,000. How about 50,000? How about the total for fixed 3 million plus 2.4 million? Plus 500,000 plus 150,000. What would be 50,000? Thank you very much. Ladies and gentlemen, of course, having gotten the total variable cost, now I know the procedure. The next thing will be for us to come here and ascertain the variable cost per unit. The variable cost per unit will be 50,000. You divide this by the number of units. You divide this by the number of units involved in the question. So the number of units involved here, we were told that this total expense was for 800 lecturers. So come here and divide this with 800. So could you kindly give me this figure, 5750. So this will be the variable cost per lecturer. Per lecturer. So the unit of measure here is a lecturer. This gives us 7187.5. Thank you very much. So each lecturer variable cost is 7187.5. After getting the variable cost per unit, please move ahead and give us the cost equation as per the account analysis method. So give us the cost equation. Fortunately, we know how the cost equation looks like. Fortunately, we know how the cost equation looks like. Our cost equation here is Vx plus F. So our cost equation will be V, which is variable cost per unit, which is 7187.5x plus the fixed cost, which is 50,000. So now we are through with this particular equation. After that, we go to the question. So the question, ladies and gentlemen, what are we told here in the question? What we are told in the question, is this. What we are told in the question is this. Part B. Using the equation expressed above, estimate the total cost of 1650 lecturers. To be declared for lecturers will be employed in 2022. Right? So, ladies and gentlemen, basically for 16, so I'll take this 7187.5 times 1650 plus 50,000. So could you kindly help us by giving us the total? Kindly help us by giving us the total. 1790, 93, 75. Thank you very much. Thank you very much. Thank you very much. So that is the total cost. And ladies and gentlemen, this brings me to the end of our today's lesson. Lesson number 1 of cost estimation. Lesson number 2 of cost estimation.